Well, good morning to you all. Tony Virtue speaking, Virtue and Partners with our regular monthly update, and still very warm here in Sydney, I can tell you today. First, good news. Markets have hit an all-time high, pretty much around the world. Australia is the same, and I guess that's a good thing. The reality of this is that there is pretty much global expectations now of interest rates dropping, and markets are forward-looking indicators, so maybe once we do start dropping rates, that'll be the end of it. But at the moment, markets are very strong. And so why is that? Well, in addition to interest rates dropping, we are seeing technology and particularly artificial intelligence making businesses more and more efficient. You can see that with CBA's earnings, and see the graph there, stock up to $118 at the end of last week. And so we are seeing real efficiencies coming through. And for those that can adapt, then it really does mean you can do a lot more with a lot less. And that makes companies much more valuable. I've spoken before that we have 6 companies now in the US individually larger than the entire Australian stock market. So what you're seeing here is a lot of pricing power for the Microsofts, the Apples, the Googles, the Nvidias now coming through, and so done well and as a force for good, this should really make for a better life for everybody. There are real dangers, of course, that this technology can be abused, and I guess we're all getting these messages on our phones, and the danger of bad actors getting involved with this. But let's be positive about this and see that in general this is a good thing. If we look at the economy, though, more generally, the country has slowed down, and GDP was 0.2 for the quarter to the end of December. And the reality is this, that without a large migration program, we had 560,000 new migrants last year. Our GDP per capita has actually gone down. In fact, we would be in recession if it wasn't for more people coming in. And as I've spoken before, we need to have the infrastructure to support them. At the moment, we don't have enough houses, and that, of course, is inflationary. What it's meant is that rents have gone up. At this stage, the cost of building has gone up, which makes it harder for the builders to price what they're doing. So it's going to take a while for this kind of balloon to burst and to calm down and to get back to a level of stability there. Last thing I would say about the listed market is it's shrinking. There are less and less companies on the Australian stock market, on the US market. Increasingly, companies are staying private. So we just, supply and demand, there's just less companies to invest in. So all in all, a positive message. Obviously, property continues to go up again on the expectation of interest rates dropping. Double-edged sword, if you own property and it's going up in value, you're feeling pretty happy with life. If you're renting and you've had a 10% increase on your rent, that's a pretty tough place to be, particularly if your work is not secure. And there's a community danger here that the rich get much richer and the poor are really struggling through this. And so we need to find an equilibrium to support this, particularly as people are getting a little bit older. We need to have a mechanism that people can retire in dignity, retain a good quality of life. And this is quite a political issue as I speak. So I think that's enough for today. Let's see if the rally continues. Do expect markets to come off 5 to 10% and then go again. That's pretty typical of how the options market works. We're as busy as ever here, and we very much look forward to seeing you face to face when we can. Tony Virtue, when experience pays.